We've all heard the stories of the gold rush. Men with pickaxes flooding into California, boomtowns springing up overnight, and ordinary people becoming fabulously wealthy or losing it all in the blink of an eye. It sounds like something of a relic of history, doesn't it? But believe it or not, there's a country currently experiencing a boom that makes the gold rush look like a garage sale. I'm talking about a place where the economy isn't growing by 2 or 3%, but has expanded by over 10% in the last year alone. A nation where GDP per capita has skyrocketed past Italy and is now chasing down the United States. And the craziest part? This isn't happening in Europe or Asia. It's happening in a tiny, jungle-covered nation in South America that, until recently, most investors couldn't find on a map. And that's why today we're diving deep into the incredible story of Guyana. We'll look at how a massive oil discovery reshaped the region, how the collapse of the Venezuelan threat has greenlit a fortune, and why this economic miracle could still turn into a nightmare. My name is Nick, and this is Coin Bureau Finance. Now, to understand the sheer magnitude of what's happening, you first have to understand just how forgotten Guyana was. For centuries, this country wasn't just ignored, it was actively avoided. It sits on the North Atlantic coast of South America, but thanks to a geological formation known as the Guyana Shield and a dense, impenetrable rainforest covering 80% of the landmass, it has almost no physical connection to the rest of the continent. There are no roads connecting its capital, Georgetown, to neighboring Brazil's major cities. There is no easy way in or out. And culturally, it's not even South American. It's the only English-speaking country on the continent and shares more DNA with Trinidad or Jamaica than it does with its neighbors. And economically? Well, up until about a decade ago, Guyana was a backwater. It was one of the poorest nations in the Western Hemisphere, suffering from a massive brain drain, where more than half of its population left for the US and Canada. The Spanish Empire ignored it because the coast was too swampy. The modern world ignored it because it had nothing to offer but sugar and rice. But all of that changed on the 5th of May 2015. That was the day that ExxonMobil's deepwater Champion rig, drilling 120 miles offshore, finally hit pay dirt. And they didn't just find oil, they found an ocean of it. To put the scale of this discovery into perspective, imagine a struggling family living in a house that's falling apart. The roof leaks, the car is broken, and they can barely pay the electricity bill. And then, one day, they find a winning lottery ticket worth $1 billion tucked inside the walls. That is Guyana. The consortium led by Exxon, Chevron, and China's CNOOC has since uncovered more than 11 billion barrels of recoverable oil. For a country with a population of just 800,000 people, that is a staggering amount of wealth. In fact, on a per capita basis, Guyana now has more oil reserves than any country on Earth, with the exception of Kuwait. And here's where the numbers get truly wild. This isn't the heavy, sludge-like stuff that you find next door in Venezuela, which costs a fortune to refine. This is light, sweet crude, and it's incredibly cheap to extract. The break-even price for Guyanese oil is hovering around $35 to $40 a barrel. And when you compare that to the global oil price, which even in a soft market sits comfortably higher, the profit margins are astronomical. For years, though, this was all just potential. It was lines on a map and promises in a boardroom. But now, the potential has become real. Production has ramped up from zero in 2019 to nearly 900,000 barrels per day today. And with Exxon's recent purchase of the One Guyana FPSO for $2.3 billion, they are signaling that they are nowhere near done. The target is to hit 1.2 million barrels per day by next year. The result? Guyana's economy hasn't just grown, it's exploded. GDP growth hit a record-breaking 62% in 2022, another 33% in 2023, and while it has slowed to a projected 16% for 2026, that still makes it the fastest growing economy on the planet. But numbers on a spreadsheet are one thing, but what does this winning lottery ticket actually look like? Well, that brings us to the streets of Georgetown. Because if you visited 10 years ago, you would have seen a sleepy colonial-era Caribbean town. Wooden structures on stilts, canals to manage the flooding, and a pace of life that was, let's just say, relaxed. Today, Georgetown feels like a city that is trying to sprint and tie its shoelaces at the same time. Drive down the East Bank Demerara and you're greeted by a skyline rising in real time. You have the Pegasus Suites, glass towers that wouldn't look out of place in Miami. You have the new Aden Hotel, and crews breaking ground on a Hyatt, a Radisson, and a Four Points, often with rates higher than New York. But growth brings with it growing pains. You see, you can import luxury hotels and expensive coffee relatively quickly, but you can't import a power grid overnight. Despite sitting on 11 billion barrels of energy, Guyana's grid is notoriously fragile. Blackouts are common, and electricity costs are some of the highest in the region because the country is still burning expensive, dirty fuel oil. The government's solution is the massive gas-to-energy project, and the plan? Well, take the natural gas Exxon is pumping offshore, pipe it 120 miles to the coast, and feed a new 300-megawatt power plant. On paper, this cuts costs by 50% and ends the blackouts, but in reality, it's rather more complicated. While Exxon has kept up its end on the pipeline, the power plant construction, contracted to a US consortium, has faced delays, which means locals are stuck in the energy affordability crisis, while foreigners sip Starbucks. So you have a paradox. A country statistically richer than some European countries, with GDP per capita surging past 35%, yet the lights still flicker. But before we move on, if you want to take more control of your financial future, one simple step is staying informed. And the best way to do that is to sign up to the Coin Bureau Finance weekly newsletter. In it, we cover the most important stories that investors should be watching across a broad range of finance-related topics. It's essential reading for anyone who wants to keep abreast of the stories that affect their portfolios. So, sign up today using the link down below or by scanning this QR code on the screen. Now, usually when a small country gets this rich this fast, its neighbors start getting jealous. And in Guyana's case, the biggest cloud hanging over its economic miracle wasn't inflation or infrastructure, it was Venezuela. To give you a quick backstory, Venezuela has claimed the Essequibo region, which makes up about 2/3 of Guyana's territory, for over a century. But for most of that time, it was just talk. It was a line on the map that nobody really paid attention to. But when Exxon found oil right off the coast of that disputed territory, the conversation changed. Suddenly, Nicolas Maduro wasn't just talking about history, he was talking about annexation. Throughout 2023 and 2024, the situation escalated to a breaking point. Maduro held a controversial referendum where he essentially asked the Venezuelan people, should we take back this land? The government claimed 95% of the people said yes, and they started printing new maps that showed Essequibo as part of Venezuela. They mobilized troops at the border. They even announced a, quote, maritime defense zone that conveniently sliced right through Guyana's oil blocks. For a moment, it looked like South America was about to see its first major interstate war in decades. But why did Maduro do it? Well, two reasons. First, he needed a distraction from the absolute collapse of the Venezuelan economy. And second, if you can't pump your own oil because your infrastructure is rusted shut, why not just take your neighbors? But then came 2026. As some of you will no doubt know, the geopolitical chessboard was flipped over on the 3rd of January when US forces intervened in Caracas, removing Maduro from power. Now, we won't get into the weeds of the Venezuelan situation today. That's a whole other video, which you can actually watch right over here. But for Guyana, the impact was immediate and massive. The threat of invasion effectively evaporated overnight. The Venezuelan military, which was once doing drills on the border, is now too busy dealing with internal fractures and a chaotic transition of power. The fake maps and the annexation laws are, for all intents and purposes, dead letters. For investors, this is the green light they have been waiting for. You see, for the last 2 years, there was always a geopolitical risk premium priced into Guyana. Exxon, Chevron, and CNOOC were drilling, sure, but there was always that nagging question, what if? And that question has now been answered. The war cloud is gone, the risk premium has collapsed, and that means the drills are going to keep spinning. But while the external enemy has been neutralized, the internal enemy is just waking up, because sometimes the only thing more dangerous than having no money is having too much of it too fast. Economists have a name for what Guyana is facing right now. They call it the Dutch disease. The concept is simple. When a country strikes oil, foreign cash floods in. That strengthens the local currency, which sounds great on paper, but it makes every other export, sugar, rice, gold, too expensive for the rest of the world to buy. The result? The oil sector eats the rest of the economy alive, and you end up with a two-speed nation, a Ferrari-fast oil sector and a bicycle-slow everything else. And if you look at the data coming out of Guyana, the warning lights are already flashing red. While the headline GDP numbers look fantastic, inflation is starting to bite where it hurts. The cost of food, housing, and basic services is climbing, driven by that influx of petrodollars. For the expat engineer earning in US dollars, a 10% hike in rent is an annoyance. But for the local rice farmer earning in Guyanese dollars, it's a crisis. But whenever you talk about oil booms, someone will inevitably say, why don't they just do what Norway did? Because when Norway found oil in the 60s, they didn't spend all of it at once. They put it into a sovereign wealth fund, invested it abroad, and saved it for a rainy day. They avoided inflation and built a safety net for generations. But here is the problem. Guyana isn't Norway. When Norway found oil, it was already a rich, industrialized nation with a highly educated workforce and world-class infrastructure. Guyana, by contrast, is trying to build a country from scratch at the same time as managing the boom. And you can see this tension in the 2026 national budget. The government has unveiled a spending plan of 1.56 trillion Guyanese dollars, which is roughly about 7.5 billion US dollars. That is a staggering 12.7% increase over last year's already record-breaking budget. They are pouring billions into roads, hospitals, and bridges, trying to speedrun development. And while the intention is good, the risk is that they overheat the engine. If you pump that much cash into a small economy that doesn't have enough workers or materials to absorb it, you don't get growth, you get inflation. And that inflation doesn't hit everyone equally. It hits the people who aren't connected to the oil tap. And if the economic divide between the oil elite and everyone else wasn't enough, there is a second, much deeper fault line running through Guyana. And this one isn't just about money. It's about history, race, and the terrifying stakes of winner-takes-all politics. To understand why this boom is so fragile, you have to look at who actually lives there. Guyana is a democratic anomaly. It's not just a melting pot, it's a collision of two specific colonial tragedies. You have the Afro-Guyanese, descendants of enslaved people brought by the Dutch and the British. And then you have Indo-Guyanese, descendants of indentured laborers brought from India after slavery was abolished. For generations, these two groups have lived side by side, but politically they live in different worlds. Politics in Guyana is heavily racialized. You have the PPP, the People's Progressive Party, which is traditionally supported by the Indo-Guyanese population. And then you have the PNC, People's National Congress, which draws its base from the Afro-Guyanese community. In most democracies, if your party loses an election, you might pay slightly higher taxes or see a policy you don't like. In Guyana, if your party loses, there is a genuine historical fear that your entire community will be cut out of the economy. And that was before there were billions of dollars on the table. Now, imagine the stakes today. The government in power controls the sovereign wealth fund. They control the contracts. They decide which villages get the new roads and which ones get left in the mud. And this is why the 2020 election was so chaotic, and it took 5 months to declare a winner, with accusations of fraud flying from both sides. The current administration, led by the President Irfan Ali of the PPP, has launched a One Guyana campaign to try and bridge this divide. They argue that the oil wealth is for everyone, regardless of race. And to be fair, they have put some safeguards in place. The country's oil money goes into the Natural Resource Fund, which is held at the Federal Reserve Bank of New York. The rules say that not a single cent can be withdrawn without parliamentary approval. It's designed to stop the president from treating the national treasury like a personal piggy bank. But critics argue that the government is testing the limits. In the 2026 budget we just mentioned, nearly 30% of the funding is coming directly from oil transfers. The opposition argues that the government is draining the fund too fast, handing out cash grants and construction contracts that disproportionately benefit their own donor class. All the while, Afro-Guyanese neighborhoods in Georgetown feel left behind. And whether that is statistically true or just political rhetoric matters less than the feeling on the ground. If you walk through the markets in Georgetown, you will hear a common refrain. The oil is flowing, but the money isn't reaching us. And inequality is widening. You have the top 10%, largely connected to the import-export businesses and the ruling party, who are buying those $7 lattes and driving new Land Cruisers. And then you have the bottom 40% who are watching prices skyrocket while their wages stay flat. If this gap keeps widening along racial lines, the risk isn't just recession, it's civil unrest. Which brings us to the point that many of you have been waiting for, the investment case. And here is the harsh reality. You are probably too late for the easy money and you are too small for the smart money. The Guyana Stock Exchange is tiny, illiquid, and practically impossible for the average foreigner to access. You can't just log into Robinhood and buy land in Georgetown. The people making fortunes right now are the insiders, the local elites, and the early diaspora investors who are now leasing land to the newcomers. If you heard something about the Asian financial crisis of the 90s, then yeah, I'll leave it at that. For the rest of us, the only way to play this is through the giants like ExxonMobil or Chevron. But buying Exxon to get exposure to Guyana is like buying a haystack to find a needle. And on top of that, here's one final awkward detail that most people miss. While the US military is securing the region and US companies are drilling the wells, they aren't the only ones cashing the checks. The third party in that massive oil consortium owning a whopping 25% is CNOOC, the Chinese state-owned giant. So you have a situation where the US Navy is protecting an asset that sends a quarter of its profits directly to Beijing. And while it might be a geopolitical paradox that Washington tolerates for now, as tensions with China continue to rise, it is a ticking time bomb. So while Guyana might be one of the last great oil booms, the risks involved today are just too high for us to give you a concrete investment case over here. Not financial advice, of course. But for the Guyanese people, this is a chance to rewrite history, to go from being a forgotten backwater to the Dubai of South America. But if history tells us anything, it's that for every Norway, there are a dozen Venezuelas. But we want to hear from you. Is Guyana destined to break the curse, or are we watching a tragedy in slow motion, fueled by oil and good intentions? Let us know your thoughts in the comments down below. And if you want to learn more about another gold rush, one that is literally nuclear, you can watch our video on that right over here. As always, thank you very much for watching, and I'll see you in the next one. This is Nick, signing off.